Hey there and welcome back. Since I last saw you, stocks have stabilized and it's been seemingly less chaotic on the public news headlines front for Chinese equities, especially Chinese education companies. But there are some really important developments happening in the background that are quite critical for investors to know. And in this video, it's going to be quite helpful to try to understand the new educational landscape in China post the regulatory updates. If you agree with what I have to say or learn something new, then join my YouTube community by subscribing, turning on that notification bell, and liking this video. In today's research piece, I'm going to be giving an important update on the latest development related to Chinese education companies. I'll provide an extensive comparison on how other countries have fared in the past when they went through tutoring bans, and then talk about the potential outlook of education stocks like EDU and TAL going forward. This is going to give you a really powerful understanding of the landscape that you're going to be investing in and help you understand the volatility of these names going forward. So I know a thing or two about the education space as a whole because I'm a business owner of an internet education company myself. So let's get started with a very brief recap of everything that has happened up until this point. So as you know, 2 weeks ago, the entire private tutoring industry that was once viewed as a consumer staple was upended in China. And you probably need no reminder that this clampdown of forced conversion from the for-profit divisions of K9 of EDU and TAL into non-profit organizations made these stocks fall anywhere between 60 to 80% in just the span of several trading sessions. Now, the fear, though, wasn't just contained in education companies. This uncertainty, regulatory policy, strictness spread to China's big tech companies as well, like the famous BAT companies, BAT, which stands for Baidu, Alibaba, and Tencent, along with any sector that could seemingly come in the way of China's grand vision of promoting social equity and fairness. As a reminder, China's birth rate has declined significantly, and the government will do everything that they can to make raising children more feasible. And without strong population growth, it will be difficult for China to maintain economic and technology leadership. So as a result, the real estate sector, the healthcare sector, even the gaming industry, all areas that could potentially raise the cost of living for families, all fell in sympathy with the education stocks. In fact, the disruption was so large that New Oriental, ticker EDU, and TAL Education, ticker TAL, have decided to cancel their quarterly earnings release. Now, in my opinion, this is not a concern, as these companies, their leadership is most likely communicating with government officials on further clarity of these policies before they give a public update on their business models. But this was 1 week ago. And now I'm going to walk through what critical events have happened since then and share my thoughts on this. The first major update is that on Wednesday, July 28th, the Chinese state media Security Times said that on the front page news that China's A shares do not face any structural risk, any systemic risk. In addition, they mentioned that the recent market declines is a misinterpretation of policy and venting of emotions. This implies that the translation of Chinese media outlets to US news sources isn't always 100% accurate and shouldn't always be fully relied upon. After all, there could be missed words in terms of tone that get lost in translation. These events also coincide with China choosing Qin Fang, a representative who could potentially be more conciliatory to the US in future talks to restore the political relationship. And before this marginally more positive news, though, China and the US had a really unproductive meeting between Wang Yi and Wendy Sherman in their latest meeting in Tianjin, China. And since that more positive release, there has been a halt of the downward trend of Chinese stocks. Baidu, Alibaba, and Tencent have stabilized along with the educational sector. In the short term, I view TAL and EDU as proxies for interpreting the aggressiveness of Chinese regulatory policy on the whole, and even a sentiment gauge of Chinese stocks. If these companies sell off while Chinese tech companies are rising, you'll have to pick which side you're on. They don't go in opposite directions, okay, for a longer period of time, so you'll have to really see which side, okay, is going to end up being the correct one. Now let's talk about why you came to this video. To understand the future of the educational landscape in China and see if EDU and TAL still have a future in China to make profits. And if so, how long will it be until they see a rebound in their shares? So this is going to be really informative and detailed. So if you're serious about investing in these companies, these are critical details that will help you understand the full landscape. So I even encourage you to take some notes for your reference. So to understand where China's policy is likely to take EDU and TAL, we're going to dive into the history of other countries that have gone through similar tutoring bans, hard bans and soft bans. I'll even talk about how the USA right now is going through a phase of discouraging tutoring companies as well, but it's much more disguised and much more of a soft policy. To study the hard bans of tutoring companies, I'm going to show you the historical data and government policies from South Korea as they did a full ban on tutoring in 1980. Then we'll dive into how that eventually turned out, and if other countries like South Korea is representative of policy decisions, I'll talk about how this might play out in China. I'm going to dive into 5 decades worth of government policy on tutoring in South Korea. The reason I'm going to use South Korea as a comparable is that the after-school tutoring participation is very high, similar to China's high student participation in after-school tutoring. So in 1980, around 4 decades ago, with widening inequality and an urge to calm the nerves of stressed students, South Korea's government implemented an outright ban on tutoring, similar to what you're seeing in China today. Throughout the first half of the decade, from 1980 to 1990, the government implemented a severe clampdown on the tutoring industry to equalize society and give citizens the image of more equal opportunities. What ended up happening was that by trying to control the supply portion of the market in terms of the number of providers, the market's equilibrium became distorted. Legitimate tutoring programs were banned, and all while the demand from the consumer side was still relatively stable. So that demand had to go somewhere, and this led to a phenomenon of underground tutoring, where tutoring became very expensive, typically of inferior quality, and also became very difficult to verify teacher credentials. And in South Korea, this approach upset a lot of parents and did not help to lower the cost of living for families. The government's think tanks concluded that this hard ban on tutoring might not have been as effective as envisioned and gradually rolled back the bans. As the 1980s progressed, the government gradually allowed underperforming students from the schools in the bottom 5% and 20% to attend tutoring and makeup classes. And by the beginning of the 1990s, students were allowed to attend tutoring during winter breaks, summer breaks, and holidays again. But that was nearly 1 decade after the ban on tutoring. And by the end of the century, at 2000, South Korea's Supreme Court reinstated tutoring as the ban was viewed as unconstitutional by their Supreme Court. As you can see, in South Korea, it took a full decade to start the peel back of the ban, and a full 2 decades to completely reverse it. Of course, the time frame will not be exactly the same for the Chinese government, but any reversal in policy could take a very long time if South Korea is an example. And in this period of time, the competitive forces of admissions in college in South Korea continued to be intense. And therefore, this made property prices in prestigious school districts like Gangnam skyrocket in value. This also explains the swift reaction the Chinese government has had on curbing property prices in Tier 1 cities in China, which has had the effect of softening speculation and putting a relative ceiling on real estate prices. In 2004, the South Korean government started experimenting with ways to continue reducing the burden of tutoring. Now, whereas in the 1980s, they controlled the supply side of the equation with an outright ban on companies, this time they attempted to control the demand side of the equation. They attempted to improve the quality of public education so that the reliance on tutoring would be lowered. The government also tried to change the landscape of college admissions so that it would be more holistic and shift the focus away from scores and exams and more towards a comprehensive review. In fact, today in Korea, you can apply to college under two systems. One known as the regular applications process and two under rolling admissions. Regular applications are based on test scores, while rolling admissions is based on the overall profile, grades, scores, extracurricular activities. Today, 75% of Korean applicants choose to apply to colleges in the country via rolling admissions. Now, according to CoStat, which is a website that has statistics on the demographic and economic data in South Korea, the industry size of the private tutoring industry has actually declined for the past decade. And contrary to popular belief, the tutoring industry worldwide is at a stagnating point due to government policies to increase the quality of public schools to reduce the need for additional private tutoring, along with overhauling the college admissions process. In addition, the government controlled the demand side of tutoring by introducing high-quality, free educational resources to weaken the need for tutoring providers. With the launch of their new public tutoring resources in 2004 called EBSI, the South Korean government was able to effectively have greater resources accessible to a larger number of students. The government also reduced the reliance on the CSAT, C-S-A-T, which is the college admissions test in South Korea. Here in the USA, we use the SAT. Now, if this sounds familiar and similar to what is actually happening here in the US, that's because it is. Here in the US, the College Board, which is the creator of the SAT, partnered with Khan Academy to provide free preparation for the college entrance exam, the SAT. Now, of course, specialized providers can help students find an additional advantage, but for the most part, I would say that Khan Academy has eliminated a lot of tutors and tutoring companies in the US that teach traditional strategies. In addition, if you follow the college admission space in the US, you would know that a number of colleges are growing to become test optional. And the existence of Khan Academy and the growing trend of test optional overall weakens the end demand of testing, especially for average students who would rather spend their time doing other things. China is planning to do the same thing, releasing and creating free materials for college prep to equalize the playing field, just like how South Korea and the US have developed these resources for students. This effect has segmented the market into two slices, at least here in the USA. One group of students who no longer believe that testing is as important as before, and another group of students that's a little bit more high achieving who study well for this test because they want more future options. In any case though, this is a net effect of a reduction in the size of the end demand for the tutoring market, which lowers the stress for average high school students. Now that said, it is commonly observed in South Korea that it has gotten easier to get into a college, but it's gotten harder to get accepted into a selective college. Same could be said here in the US, and that could also be true in China. The point is that the trend globally has moved against private tutoring and more towards the democratization of resources for students to use. I believe that this is a long-term positive direction for students, even if this comes at the expense of tutoring and private educational providers. That said, the best companies and providers for education will most likely benefit from radical consolidation in the industry as weaker hands leave the market. Now, the market leaders will most likely end up owning more market share, become more profitable, and in the eventual revision of policy, they could emerge stronger than ever before. In such a scenario, EDU, New Oriental, and TAL could experience Bitcoin-like returns if given a decade or more as an investment horizon, since they would essentially multiply their revenues and take over the entire market again if any ban is eventually reversed. That said, it is incredibly important to point out that many things can change within the next 10 years. Now let's talk about how this specifically impacts New Oriental and TAL. In the past week, EDU and TAL have stabilized on news that these two market leaders are ready to comply with government regulation and change their business model. The most logical steps for them is to pivot towards growing their non-academic tutoring businesses. As investors, we're probably wondering, well, what is the market size potential of these segments? After all, most people might not know how large is the addressable market for extracurricular activities such as coaching in music, athletics, or the arts. Well, let's put it in perspective. As a comparable with South Korea as a focus point, 25% of all tutoring spend today is now dedicated towards extracurricular activities. This figure was 25% in 2019, probably higher now, and it was 19% back in 2007. So as the importance of testing has somewhat diminished, the disposable income and dollars towards tutoring has been allocated towards the extracurricular side. And this percentage is likely to rise as governments globally attempt to make entering colleges more holistic by lowering the stress of standardized testing, with increasing emphasis on resume and profile shaping. As a result, the total addressable market for extracurricular coaching is quite meaningful. After all, the college admissions process in China and abroad itself still requires an applicant to have an overall outstanding profile. Now, with the industry consolidating, it's possible that EDU and TAL take up the lion's share of the new business after the dust has settled. And I believe that small, medium enterprises, we call them SMEs, they'll find it very difficult to continue operating in this kind of environment, which long-term benefits EDU and TAL. In fact, there are already reports that privately owned education companies are struggling to navigate the current environment in China now. So what will all of this mean in the short term or even intermediate term for the share price of EDU and TL? Well, if history is any guide, one major takeaway is that any sharp short-term bounce on EDU and TAL needs to be studied quite carefully, because history has shown, if we look at South Korea as an example, that policy reversals could take anywhere between 5 years at a minimum to 10 years, okay, realistically, and perhaps even 2 decades for a full reversal. This means that if you're investing in EDU and TAL in the near term, you are investing in a very different business than what it was just even a month ago before the ban. So if you're investing in EDU and TL, the near-term and intermediate outlook is based on, in my opinion, what types of non-academic tutoring segments they can enter, and number 2, any further clarity on the markets that they can enter. If we see any updates that EDU and TAL are permitted to enter new industries, this will likely benefit the share prices tremendously because they don't stay in their current domain. In the meantime, it's really important to be on the lookout for how these companies are reacting to the Chinese government. And I can't stress this enough. If they are complying with great sincerity and they develop great relationships with Chinese government officials, they'll have more clarity into their future. And it's even possible that they will be allowed greater leniency in the future to pursue their business initiatives. If there's any further signal of them receiving penalties or warnings for breaking regulations or not following and complying with Chinese officials, I'm telling you right now, that means they're not complying, and that honestly could lead to even more serious consequences. You do not take the Chinese government lightly, especially after they've made it their public vision to achieve certain societal goals. During a speech for the 100-year founding of the Chinese Communist Party, President Xi re-emphasized the need to strengthen the equality of the country while ensuring Chinese leadership continues to expand their presence globally. If there's any public news of Chinese companies disagreeing with President Xi's policies, you might as well sell these positions now before the CCP makes these companies unable to operate, or position them with so many restrictions that operating is not even profitable. Same goes for investing in other Chinese companies. If you see any company not complying or not being sincere with their cooperation with the Chinese government, the writing is on the wall, and it won't be long until they face significant issues. This is why guanxi is so important in China. Lately, Jack Ma's guanxi with the government isn't so great. That's why despite all the bullish analyst praise on Alibaba, it has been struggling too. But perhaps I'll visit that in a future video. Comment down below what you think about the current education system in China and the US if you have an opinion, or anything else you want to share. If you enjoyed this video, let me know by doing two things: subscribing and turning on that notification bell. Feel free to follow me on Instagram as well. And if you made it to the end of this video, I want you to know that you are great, and your patience will make you a great investor. In this game, patience beats intelligence all the time. See you next time.